Hello all, this is Viresh. You are watching Virus Academy YouTube channel. Yesterday there is a budget announcement by Finance Minister, and today we are going to discuss the what are the budget highlights for this, especially for the salaried professionals. There are some changes. We are going to discuss about those changes in a crystal clear way, and even the non-finance background, anybody who is actually doing a job can understand this video very clearly. If you like this video, please like and share this video. Okay, let's go on to the topic. The yesterday's budget total proposed expenditure is 45 lakh crores. It is 45 lakh crores for 2023, and which is around 14% higher than the last year's budget. Last year 2022, it is 39 lakh crores is the proposed expenditure. Okay, so there is a 14% increase. An interesting point. And I put a graph here. This graph, the source for this graph is a PAB website. With this graph, you are able to understand that where the money is coming to the government and where government is spending that money. And if you see these two graphs, one is for the government earnings. The major part of the government earnings is coming from the borrowings. So government is taking loans from the various sources are available, and that is contributing around 34% of the total revenue of the government. The second highest source of income for the government is GST. This is a very positive fact. In fact, so because 17% is contributing from the GST itself. The next highest is from the direct taxes in form of the personal income tax or by the company corporate income tax and all combinedly it is around 15%. That is the third highest. And the lowest income source for the government based on this graph, it is non-debt capital receipts and customs duty. So customs duty and non-debt capital receipts both combinedly 6%. That is the lowest. Highest is from the borrowings and lowest is from the customs and the non-debt capital receipts. Okay, that's about the earnings. From these earnings, where the government is spending is provided in the another graph here. The major spending is for the interest payments, obviously, because 34% you are taking the loans to get some earnings. Obviously then there will be some interest payment will be there, that will becomes the major part of the government's spending. 20% is the goes to the interest payments only. So what is the next highest one? Next highest one, state share of taxes and duties. So when central government is collect the taxes, and they have to give the shares to the respective states and the union territories, etc. Right? There's a share of the taxes to the states that contributes around 18%. What is the lowest spending? Interesting fact. This is the lowest spending of the government is on the pension. Pension, they are only spending 4% of the total earnings that they are getting. So this graph is interesting and some give some insights. Please go through. And now I will go to the main part of this topic. The reason why I'm making this video is for the give some a crystal clear update on the what exactly the budget is gives for the salaried professionals. As you know, you might have heard from the headlines also everywhere yesterday that there is a basic exemption limit is increased to 3 lakhs, and till 7 lakh there is no tax liability. What's the truth of this? Is it applicable for everyone? The answer is no. This is not applicable to everyone. If you heard of one thing where in the yesterday's speech, there is a new tax regime. When finance minister is talking about this, she always specifies the new tax regime. What is this new tax regime and old tax regime? Many of you are already aware of this, both the things, but just for understanding of everyone, I'm explaining what is it old and new. Old tax regime was introduced since it was there since 1961 when the Income Tax Act was introduced in India. From that time itself, this new old was there. We used to pay these taxes every year. That is the old tax regime. So what is new tax regime? New tax regime is introduced in the Finance Act 2020 very recently, just 2 to 3 years back. This is the new tax regime. So what is the difference between these two? So when we file the return, in addition to the income, we will get some deductions also, like HRA, house loan interest repayment, principal repayment, and some any donations, any LIC, Mediclaim. All these things we will get a deduction when we are filing the return. That we are all have experienced it, right? So under the old tax regime, government said you can take the deduction as like that you are filing for every year. You can take the deduction, you whatever income is left that you can pay the taxes on it. Under the new tax regime in Finance Act 2020, what they said is we will give you a concessional tax rates. We won't charge you too high tax rates. We will give you concessional rates, but you won't be allowed to take any deductions. For HRA, for housing loan, for anything, you won't get any deductions. This is the main difference between the old and the new. Okay, and tax is levied at concessional rates because to set off that, because we are not the new tax regime, people are not getting any benefit. They are charging at a concessional tax rates. That is the difference. Now, all the changes in the yesterday's budget are related to the new tax regime. This is point to be noted. Everywhere in the headlines, you may have seen that till 7 lakhs there is no tax, till 3 lakhs there is no tax. All is applicable to the new tax regime. Old tax regime people as it is. Till 2 lakh 50,000 no tax, 2 lakh to 2 lakh 50,000, that's old slab rates, whatever is there, that is only applicable. Okay. The first thing I'm going to talk about is major changes in the budget related to the salaried people. Point number A. So there is a proposed, just now we discussed, proposed to increase the exemption limit to 7 lakhs from existing 5 lakhs in new tax regime. Okay. Thus, persons in the new tax regime will income up to 7 lakhs will not have to pay any tax. Earlier, under 5 lakhs, between the old and the new, due to the rebates, due to the basic exemption limit, there is no need to pay any taxes. That is continued for the old one. And for the new one, they increased the limit from the 5 lakhs to 7 lakhs. So that means in form of basic exemption limit, in form of standard deduction, rebate, etc. Even if your any annual income is 7 lakhs, you need not pay any tax. But this is not applicable to the old who have opted for the old tax regime. Okay, that is the change. And that is one proposal for the new tax regime people. And the point number B, only under new tax regime. Again, second proposal also for the new tax regime only. Basic exemption limit changed from the 2.5 lakhs to 3 lakhs. Currently, under for the old and the new, the basic exemption limit is 2.5 lakhs. Only for the new tax regime, this basic exemption limit was increased from 2.5 to 3 lakhs. 50,000 they increased the slab limit, and they have actually they made some reshuffling of the slabs also here. You can see the revised one here. And again, this is applicable to the new tax regime people, whoever is not opted for any deductions of HRA and etc etc. And you can see the slab rates here: 0 to 3 lakhs no tax, 3 to 6 lakh 5%, then 10%, then 15%, 20%, and 30%. Above 15 lakhs, if 15 lakhs it is 30%. It is more concessional when you compare with the old tax regime. So what I feel is government is planning to slowly move towards the new tax regime, and they just want to get rid of all these deductions and all. This is what I feel from the yesterday's budget. Every proposal is for the new tax regime only. Okay, now we will go to the point number 3. The next one. This is also for the new tax regime only. Standard deduction of 50,000 to salaried individual and deduction from the family pension of 15,000 currently allowed for the old scheme. This was already there in the old regime. It is proposed to allow these two deductions under the new regime also. Now, under the new regime also, this standard deduction as well as family pension will be allowed as a deduction. So government is encouraging the taxpayers to move towards the new tax regime. That's why they are bringing all these, treats. They are giving all these treats to us, right? And now point number D. Income tax department is making the new tax regime is a default tax regime. Important point. So default tax regime, for example, you have not chosen anything. You go to the income tax website and you just filled the details. You have not opted for anything. You have not claimed any deduction. You have not claimed. You just show your income there. Then your tax will be calculated automatically with the new tax regime only. That is the default option. Okay, even in your companies also, wherever that you are working, the local portals will be there, local systems will be there. If you have not chosen the old versus new, automatically tax will be calculated under the new only. This specific rule was not there earlier, that they brought into the existence. This is the new regime, will be the default tax regime. Now you have seen that all the benefits, concession, everything goes for the new tax regime only. Old tax regime people as it is. There is no concession in this budget for the salaried professional. Okay. Now the question comes: old is better, new is better. It depends on your particular case. It depends on case to case basis. For example, if you have a housing loan, if you have an LIC, then you better go with the old only, because you will get a deduction. At the same time, if you doesn't have any investment plans, you have only salaried income, you don't have any investment plan, or even if you have an investment plan, it is very, very lesser. That investments or the savings, LICs are very, very lesser, not material amount. Then you go with a new tax regime. Okay, that's the substance of it. But majority out of 100, 90 people will have investment plan, 90 people will have a savings, 90 people will have a, either house loan or HRA. So better people, most of the people will choose the old tax regime only because still the option is available. With this concessions and all, government is actually dragging the people to the new tax regime, but how many will be converted is a question, because nobody wants to leave the benefit of the deduction. Okay, that is the substance of this all these amendments. I hope you understand this better. There are two miscellaneous points were also there, point number E and point number F. Point number E, encashment of leave and up to 10 months of average salary. So this amendment is simply like, there is a leave encashment was there, right? So whenever there is an F and F, especially for the retired people, the F and F will be there. In that F and F, full and final settlement, if the leave encashment is up to 3 lakhs based on the earlier provisions, if the leave encashment is up to 3 lakhs, then there is no tax, completely exempted. Now the 3 lakhs has been increased to 25 lakhs. This is applicable to the employees other than the central and state governments. Other than the government employees, this is applicable. Okay, this is a good move because 25 lakhs is a good amount. Almost there will be no tax on the leave encashment. Point number F. Point number F is related to the surcharge. So in India, the highest income tax, personal income tax rate, that is 42.74%. 42.74%. So this is applicable for those people whose income, yearly income, is above 5 crores or above. For them, the tax as well as the surcharge, including the surcharge, the maximum tax rate is 42.74%. This is the highest tax rate in the world. So government don't want to be get that visibility of India is charging the highest tax rate for the personal income tax. So they want to reduce this tax rate. So how they want to reduce the tax rate? They want to reduce the surcharge rate. So this is also applicable to the new tax regime only, old tax regime as it is. This amendment is also for the old, new tax regime people only. So they bring it down this 42.774% to 39%. Currently, the highest tax rate is the 39%. How they bought it down? They by reducing the surcharge. The surcharge is 37% of the tax. On the tax, that the existing surcharge is 37%. They brought it down to around 25% now in this budget. So this is not applicable to the all the people. Maybe in India, maybe less than 1%, maybe 0.5% of the people whoever in the, because whose income is 5 crores or more, mostly those are board of directors are very senior management in the companies. So though they will only have this kind of income like 5 crores and above. For them this is useful, and further this is only for the new tax regime. So all the amendments related to the finance budget 2020 related to salaried professionals is related to the new tax regime only. Okay, I hope this information is useful to you. Please share it with all your friends and groups, whoever is having the confusion about the STD's budget. I hope this is interesting. Thank you so much. This is Viresh signing off. Bye.